All right. Mic check 1 2, mic check 1 2. Squeaky microphone stand needs to be oiled. Let's see if everyone can hear me okay, and then we're going to get started in just a few moments. Hey, Mr. No Name, answer your phone. Actually, never mind. After the stream. I just got your text. So after the stream. I have some business to discuss, sir. Hello, everyone. I see Bobby's in here. No name. Baba Roca or Raka. And we're going to get started here in just a moment. Trying to deal with a few personal items that literally just came up. Want to know the fun of being a homeowner? Where I live, they like to, insurance companies like to just say, you know what, we're going to cancel your policy because you're in a fire area. Meanwhile, we're actually not. So they're going to make me jump through hoops here. Yes, they're a little bit of business. All right, we're going to get rolling here in just a moment. Let's get this screen set up the right way. And we can keep that there, that's fine. Or it's just going to disappear. Sure, that works too, I guess. What the heck? Oh boy, what was that? I guess the price note just disappeared. That's fine. We'll keep that on. We'll just refill that one. No worries. All right, so get the music under control here. Bring this down a little bit to off. We'll pause that and turn that back on later. All right. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. I'm your host, Landy, This is where we take a look at the macro time frames and weave that into our daily analysis. And we do have a little bit of a character change here on the daily so far. We'll see where it closes today, but it looks as though Bitcoin is breaking down from this consolidation range. If we turn on our Bollinger Bands, we can see that we did hit one of the main areas that I spoke about in the Bitcoin in 60 seconds video for today. And that is around the 29 to 29.2 area. It did dip a little bit below here. What did we get to? That would be 28,850. And if we do just snap a horizontal line to look left here, you can see it's right around this consolidation high prior to the drive up to around 31K, and then the drawdown back to test around the upper $24,000 to $25,000 highs over here. So this is nothing out of the ordinary. There is a few things to be aware of that we'll get into in just a moment, because Bitcoin is in a fairly tight consolidation, and breaking down from it is probably going to lead to some larger moves. I will caution everyone here that if Bitcoin does bounce back into range, as I said in the Bitcoin in 60 seconds video, I would have preferred to see the bounce at 29K hold initially, but if it does regain the wick low at around 29,400 and then regain any of the close open structure up here, this will be a pretty nasty downside fake out, and things probably run back up to test somewhere around the basis again, above 30,000 to 30,300 or so, where the weekly resistance is overhead, and maybe even to the upper first up there. But if it does close below the lower second, I would expect things to test down a little bit further. I'd made note of that quite a lot lately. The important area for Bitcoin right now underneath that 29.5 region, which is a daily support, it's going to be the next daily down here at 28, 4 to 6, and then the weekly here at 28K. We've been talking about this for a very long time. You can look further left than even the consolidation structure over here at 28, 4 to 6 to the it's been a little while since I pointed this out, but it's the redistribution structure on the daily from the way down. So that area you do want to see retested as support. And when we look at the structure here, it has not really been retested as good support. It's been retested and tested quite a bit as resistance. We can go to a cleaner chart here. Let's go back over here. So we can see that this has been retested as resistance, that area, and then again as resistance. There is some deviations around it in here. There's, a move through it, and then moves down, and then another move through it. And it really hasn't been tested as, like strong support just yet. So it is the logical place to be looking if Bitcoin does continue down and not regain any of the current consolidation range. That is something that you should be aware of. Yes, the structure is very bearish. Yes, it's looking like continuation on the daily and lower time frames, and even some of the higher term time frames are starting to turn down, which could in fact lead to much further downside. So when looking back at this chart, there is with support and resistance here below the 28K region, there is daily support around 27,250 to 500. And then below there's a weekly support area at 26K. And quite frankly, that is not out of the cards if this does start to expand to the downside. But I want to bring your attention back to some of the more interesting things to me, and that is here on the 2-day, there is a bit of a setup going on. That is very, very low volatility. Yes, we are seeing volatility pick up initially here, but it is not yet a downside signal in my opinion. So we do have BBWP on the 2-day up over the moving average here at 6.75% over 2.5%. And Bitcoin has come down and nearly hit that lower first standard deviation on the 2-day chart. Now, I wouldn't really be looking for much continuation if Bitcoin hangs out above that lower first on the 2-day chart, and that's coming in at 28.8. And when looking left, there is, just the same consolidation structures that we've already seen here, and support potential support structures here around the 28 4 to 6 region, but coming in a little bit higher. You remember last week when I said, hey, be aware that it might not come in exactly at 28 or 29 to 29.2, as I've been talking about, mainly because of the daily look for volatility, that you might see a higher 28K region retested as support. And what we're going to look for then is for it to regain the 2-day basis band, and that is right now at $30,000. Now, this candle does not close with today's candle. It closes with the Tuesday candle. So this is something to keep an eye on, because we do have Bollinger Bands on the 2-day compressing fairly quickly. And the setup would really be either a breakdown to the lower second standard deviation, which is coming in where? 27.5. So again, we're right into the support areas. So we can go back over to the support resistance chart here. You can see that the lower first, kind of in between the SR areas of the daily weekly and this daily area that was support that is now lost at 29.5. And the lower second is just above that daily SR level at 27, even 250 to 27.5, coming in at about 27.6. So we do have a tightening of the Bollinger Bands, and we are going to see the etchings of expansion on the 2-day, but because the structure is coming off of an uptrend or a trend break, and we need to see higher lows put in. So on the 2-day chart, this thing can put in a higher low anywhere above 25.6, and it's still fine. There's not much to be worried about for the bulls in that regard. So there's a lot of room for positioning. And, the lower second standard deviation, again, I say this every time, but it's either going to act as a reversal area if it's on supports. In many cases, you'll see it will act as a reversal area. Or if that area is broken, that means obviously in most cases that it's breaking down from that support when it's headed down, of course, and the opposite, breaking through resistance and or reversing at resistance. So it's either going to be a reversal or continuation at the lower second if it does get there. And for a trend shift like this on the 2-day, so we had a downtrend to a consolidation after the downtrend break here, what you're looking for is, in most cases, you want to see the lower first to the basis hold as primary supports on any move down, especially when you see compression like this, and the lower second at worst to the lower third at worst, only if they are above support areas. And this wouldn't be the primary support area below price action down here where the lower second and third are. They're in between support areas. The primary support areas that weekly at 28K and the daily area even at 28.46. So keep that in mind as we progress even through the charts here. The 3-day, just getting back to the basis band here at 28.8. Still looks okay. Room down to the lower first, which is coming in at just under $27,000 at 26.9. So unless things just race through all of the downside supports here, I'm not necessarily looking for that right away. Hence the call at around 28.4 to 6 and 28K. The 5-day is the one that is a little concerning here. As you can see, the basis is lurching over as it is still catching up to this downside move that tapped on the lower second. And then Bitcoin ran the other way and tapped on the upper second. Now, the big thing about this is you'll notice on the 2-day or the 2-day, we're on the 5-day. We talked about the 2-day and 3-day, but on the 5-day here, it's fairly rare outside of impulsive moves. Even then, it's still rare to see closures outside of the second standard deviations, like to the downside here. We did get a few, but you want to see trend maintained. In this case, that was the lower second to the basis, which maintained the trend. And then now you want to see on the 5-day here, the basis to lower first and second maintain the trend to the upside. So that would give it room to run this last low at around 25,200, 25K to 25,200. And that would not be uncharacteristic from the setup here. Of course, if it does find support there at the basis at around 28.4, we're right in that support area at 28.4 to 6. It's lining up with critical levels across the board on these higher time frames. So back above the $30,000, that would be above the upper first standard deviation here on the 5-day. So that is kind of the zone right now. I would argue that on lower term time frames you can probably refine that, but in general 28.4 to 6 and 30K are going to be the big ones, and it is possible that 28K at the weekly will come into play as well. When looking at the weekly chart, we have seen this update. 28.5 is the basis band, lower first is going to be at 27. So that daily support could get ripped through at around 27,250 to 27.5, down to that 27K area should Bitcoin break through that 28 to 28.4 to 6. So be aware of that. And to the upside, we're seeing 29,940 on the upper first standard deviation here for the weekly, so 30K. And it's about a $2,500 range. It's about a $2,000 range, not a $2,500 range. You could give it that room down to 27.5, but realistically, bulls don't want to see the weekly at 28K break. So be aware of that, and that is this weekly here. This is a high structure put in downtrend to a high structure to a low. You'll see that on most GAN swing indicators or swing indicators. Doesn't, the GAN calculation, it's just a swing indicator. So in this case, that high 28K, at 28.4 to 6 is coming right in at the basis band, and the close open is right there at 28K. So that's the area that I'm looking for. Don't want to see closures below, realistically, 26K, which is the close open low down here. And definitely don't want to see closes below that 24,750 wick low. So that would be around the lower second standard deviation, although that is slightly above that area, coming in on the weekly at around 25,600. So, that's more in line with the close open structure. It's kind of getting there, but just you don't want to see a reclaim of that area. That was the big breakout area that needed to. That area on a bearish reclaim would not look good. That was our breakout, and Bitcoin back under there is going to definitely favor the bears to go run the lows again. And I think it's a little too early to go glooming and dooming just yet for the bulls, but we'll see how things get picked up here. When looking at open interest, we'll refresh the chart here. You can make note that OI is, did come down to about 9.4 billion on the move down here, and you see that OI is taking off on the move down. This is a combination of longs and shorts. I wouldn't make too much of this unless you see OI ticking down as price comes up. That would mean that breakdown shorts are getting wrecked. So keep that in mind when looking at open interest. So we can see that we have on this guy here. Let's see. Yeah, so we had equal lows on OI, but lower lows on price action. That would be a divergence, but that divergence does not mean that things are going to go up. Generally speaking, what I will tell you just from an observational point of view, when you look left here, this entire breakout to this consolidation structure is roughly, what were we at? It's kind of the break it's kind of the line in the sand for what was building this range from over here at about 9 billion and on the lows about 8 billion. So 8 to 9 billion, and now kind of sticking above the 9 and playing around in the 9 to 10 billion area. It's kind of where this range has remained steady. So I would venture to say that we probably wouldn't see OI drop below 9 on a move up. It might get there and then reverse. Like, for instance, if it does wash out breakdown shorts, that would be OI coming down and price rising. That's how you know that breakdown short positions are getting taken out, stopped out, liquidated, whatever you want to call it. They're both seen the same way, by the way, by most liquidation engines. So in this case, that would probably then start to move back up once things got closer to regaining some of the structure that was lost here on the hourly at around 29.5 at that daily. So just be aware of that, and also be aware of any retests of the range wicks and even the close open structure on any kind of a move back up. So when looking at the daily here, we can go ahead and mark off a zone, a zone back to the upside here. So we can go ahead and take the close low and the wick low here. And we can make a zone out of this and say, all right, bears do not want 29.8 reclaimed. And I would argue they don't even want 29.5 reclaimed, but just keep an eye on this if you are in a short position, as this is likely, it could retest the low side. It could just keep dumping out down to the next supports. I don't really have an opinion, but if we do see a rise from here, then just be aware of 29.400 to around 29.800. That would be the breakdown bearish retest area. If we do start seeing closures back above 29.8, it's likely going to rise further and retest around 30,000 to 30,300 again. So just have that locked in, and make sure you understand what your objective is if you are short, and that is taking profit at areas of support, and then make sure that you are risk tolerant if it does come back at you. So I'm looking over in this chat over here. Yeah, I see you guys. I will let me get through some more of this, and then I'll answer some of your questions. So now let's take a look at the 4 hour. So we have nice expansion on the 4 hour here. Nice break of the lows. We got two closes. It is, past the lower second and third on the closes off the initial expansion. Nice tight contraction there. reversal off the upper bands, and this is where things do kind of get dicey. If it does not get continuation, meaning from here on the 4 hour by 1 o'clock my time, which is going to be market close in the United States here for the New York session. We've got the lower second standard deviation currently at around 29,231. This is going to continue down while price is rising towards it. So wherever the lower second standard deviation updates to here in the next half hour is what I'm going to be paying attention to, because if it is regained and closed above, that's where we're likely going to see a test up to around the overhead resistance now, which would be the 29.4 wick low. You could pick out the 29.5 area as well, as that is a decent wick low area. But I would be looking at where the lower first is, wherever that comes in. So in this case, that is 29.4 to 29.5 at the lower first. Of course, this is going to move down. So this is going to be setting up on the 4 hour on any rise back up in price action, what my criteria is for maintaining this downtrend. And right now, I mean, this from here could go all the way up to the upper first at around $30,000 and still be bearish from the look of the bands here. I would argue that bears don't want to see closures above that 29.8, but intraday, price from its current position could rise all the way to the upper first. I'm more interested in the trending below the basis price action. So if this does move up any further, look to where the lower second is currently at 29,230. If it does regain that in the next close, then we look to the overhead resistance and wherever the lower first is to the basis. It's going to be the primary bearish retest zone until the upper first starts to move down further. So that's my advice when looking at the 4 hour. We can see that Stoke is heavily turned down, and this I'm telling you, trend lines on Stoke do work really well. I think they work better than on price action. We can see that the breakdown below, a little trend line regression, and that's where you could have even had the highs in here. So if it did turn and break back up, what you would want to see if this does turn back up on the K to the D read is to reject any kind of a trend line regression. So in this case, 29.8 would turn Stoke back to the upside for the current closure. That is going to come down probably somewhere around 29.5. So just keep that in mind, that it would be somewhere around this overhead resistance for a completed cross, and or if it does not try to cross in the current closing candle structure. For instance, right now, it's looking unlikely. There's about a half hour left, unless it just starts to pump for the next 30 minutes. It's unlikely to go and try and turn that from where it is right now at 29.8, right? So it's more likely that in the next closure, it's probably going to be around 29, 4 to 5. And then we have eyes on, because that is also the overhead resistance. And, I wouldn't be surprised if it was just a bearish retest based on some of the other stuff, but I would still be cautious, man. There's something, I've got a sneaking suspicion, but it's not technical analysis. This is breaking down on expansion on the 12 hour. We got 23/6, volatility metrics for BBWP. That's confirmed expansion, closed below the lower second. It's trading below the lower second, so that does mean that the next 12-hour candle is likely to be down after even retests up. But if price just stalls and goes sideways and then tries back up and does regain this, previous support area now as a resistance zone, then I'd be looking for things to pop right back into range. So be aware of that. Stoke pivot on the 12-hour, though, is turning down. This is just an initial cross though. So before the end of the day, if bulls do push price back up and regain 29.5 on a close, Stoke will not complete its initial cross. We would have to wait to see the next candle. So that is a little bit of caution, at least for the end of day today for bears. And then bulls, on any closures above 29,331 would get an initial cross up on the daily. Now, initial crosses are not complete signals. They're not something that I would be taking as like, oh, it crossed, let's go ahead and enter. But it's an indication of, a potential shift being in the cards. So just be aware of that. We've got 29,331. If we do see closures above that area by close of day today, likely to see an initial cross of the K over the D on the daily. And then the 12-hour would avoid an initial cross down on any closures above 29.5. So the likelihood of that happening, I don't know. I don't really have an opinion. We hit one of my main downside areas, a little bit past it at 29K. If it was going to be a fake out, in my opinion, it would have gotten bought back up above the lower second standard deviation by now. We'll see if there is any kind of power behind this coming into close today. But after traditional market close, especially here in about 25 minutes, and then come back to it. But for right now, the bigger targets on the board are going to be the 28.46, 28K. And then, I would keep an eye on the zone underneath for deviations underneath the weekly support there at 28K. And then down here at the next daily support zone around 27,250 to 27.5. And realistically, based on many of the things that we just looked at, we could probably mark the $27,000 area. I think that's where there is an order block candle in here with the low over here at 27K. So, or the open or close, that's a close rather, sorry. It's a bear candle. So this would be the close, and this was coming in at it's 26,980. So basically $27,000. And then we've got the open that was coming in at around 27.5. So, right in that daily support area. And this particular area, again, was resistance and has not been retested as like solid support. You see how this acted as really good resistance over and over and over again. This entire area has not been retested as like a decent support. It's just been run through it to the downside and then find it as resistance and then impulse through just about every time that we've come up to this level. So I guess you could consider this as decent support here. So this could be your SR flip. So I take that back. Never mind. It's the 28 to 28.6 area, which was found as resistance, but not really tested as like a decent support area. I'd still argue, man, that this is decent support underneath. Yeah, I take that back. So the 27 to 27.5 is decent support. It's the 28 to 28.6 region that really has not been retested as a decent support just yet. So I would like to see it hit. Still doesn't mean that it's going to. It's definitely looking like it's going to, but just be aware of the stuff that I just talked about to the upside should Bitcoin start to rise from here. All right. Let me look over at chat here. Hi, Spin. How are you? For everybody that's in the chats, go ahead and hit the like button for me. That'd be awesome. That does help out. Let's go ahead and let's revisit the monthly here. We are a week out from the monthly close. And looking at the basis band here, again, it is coming in at 28.5. So it is likely that price drives to that area. Even if it's not in today's candle and the subsequent candles, even if it's on a wick, I do think that it's looking very likely that it's going to head to that area. So when looking at the monthly versus the weekly, this is kind of where things are going to get very interesting. So at the end of this month, we're going to see an update in Stoke, currently pivoted at 19,000. I do suspect it's going to be above the spike low over here and probably follow in tandem with that lower first standard deviation on the monthly. It's running a little behind, but I do suspect that 19,500 probably going to be around 20K or higher in the 20K region for the lower first and the monthly momentum pivot coming into the end of the month. Excuse my voice, having a tough time today. Weekly, still headed up on any closes above 29,960, which does mean that this is trading under it right now. We would see a weekly cross to the downside if it did close below there. So basically $30,000. That is the pivot. For the weekly, it's got to close there by the end of the week. And we've got 30,838 on the 5-day. Got an initial cross down. This is likely to complete its cross down here in about 4 hours and 20 minutes. 4:20, nice. 3-day headed down, 30,800. And then we've got that 2 days all the way up at 31,250. So yeah, this is looking more and more like it's probably going to test down to not only, I would venture to say that that kind of pressure down, unless this is very quickly regained, this range break is very quickly reversed and the bulls reclaim the lows on the wicks and the closes, below 30K basically. This is very likely to run to the areas that I just spoke of and maybe even further, especially if it does start to break down below that lower first. The lower second coming in at that 27.5 area on the 2-day. But, if it started to close below there, we're looking at expansion to the downside towards this low side structure at around 25,000 again. And, yeah, I would not be surprised if that is something that we saw, but I would give it time to present that type of a setup, as the 2-day is in a contraction phase right now, while the daily is, quite honestly, it's not like really aggressive. Yeah, 27,250 is a spot to 27.5 or so. You could even take 27K as an area of interest, as it is coming up on multiple time frames with the bands. So, but just pay very close attention the next couple of days. We do have economic events. We've got the Fed on Wednesday, I believe. Yep, that'd be Wednesday. There's going to be interest rate, so FOMC interest rate stuff. Then we've got GDP, and that is going to be quarter over quarter. And durable goods month over month is coming out as well. And then we've got personal income, personal spending, and then the core PCE, so producer index. All the core numbers are coming out at the end of the month after the meeting and the interest rate decisions. So it's likely going to get very volatile. So I wouldn't rule out quick wicks down and even retests back up before the actual meeting. And not technical analysis, but it would be very fitting if Bitcoin just came back into range and hung out and got everybody long again, and then before the meeting, and then during the meeting wipes them all out. But that is not technical analysis. That is just something, just a funny theory, if it did come back into range. So let's drop back to the 4 hour for one moment. It's 29.8, right? Because that's going to be closing soon. Where's the hourly at? Hourly is trying to turn here. 29K is going to be the pivot to maintain that bit of an upside angle. It's not quite a strong signal, but it might start to give one if, well, no, this is weak, especially this hourly candle right around the lower first. But if it can start to push up in the next hourly candle, then that would be something to watch for. 15-minute is getting a bearish reset on momentum. If we look at Stoke here, or Stoke, we looked at Stoke. If we look at RSI, which is a Wilders, see it came up to around the midline here. So bearish control zones around 29,000. Signal lines about $65 above that, so 29.65. This on any move back into the bearish control zone likely to tag below 29K, and then watch for potential bull divs coming into the last 4 hour candle of the session on the lower term timeframes that might inform a retest up. I will be honest with you, this does not look encouraging for the bulls right now, that's for sure. And for the record, I'm short, so I'm still in a swing short position. And I have not found much to be interested in on the long side, even at that support. So I'm just not seeing what I want to look for even for longs right now, unless something changes in this last 4 hour candle of the day. Let's look at the 2 hour. 2 hours is a pretty good time frame to see if there's still good pressure down, and there is. But a close above 29,117 would start to turn the 2 hour. It has regained the lower second standard deviation, and the lower first is at around 29.3. I suspect that this is going to get ready to turn in the next 12 minutes or so here. So what I'll do actually is I will turn on the music for a minute here. I'm going to go to chat and I'll take some questions on stuff, and then we'll come back to this. The other thing that I was talking with a couple of you about is the I've had a few people ask about, swing fail patterns and what constitutes a swing fail pattern, high, low, reversal setup. And I've asked a few if I should do a dedicated stream. I've gotten decent reaction to that. How do you guys over here on YouTube feel about that? And then you guys in the other chat over here, let me know if you want a dedicated stream. Maybe I'll use Wednesdays. I'll do like a Monday, Wednesday, Friday thing. This week we'll see how it goes. But maybe we'll use like Wednesday to specifically cover a subject like swing fail patterns. I'll look over here in chat just a moment. Let's get a little bit of background music going here. All right. So check on the YouTube chats first. Do I use spider lines? No. It's a mess. It becomes a mess. You can find confluences off of them, but I just don't. There's the more difficult you make your chart in terms of your view of it, and what you're looking for, what criteria you're trying to meet, It just doesn't fit into my plan anywhere. Like, which spider line, how do I risk manage that, right? You can use it for confluence. Like, you can say, okay, it's lining up with my lower seconds, my SR levels, my whatever it might be, but it's not necessarily something that I'm interested in, because it doesn't lend anything to a trading plan. When you have a trading plan, you have very clear criteria for entering long and short positions, and it should be like a checklist. And I would have nowhere to put something like spider lines. Even trend lines, I don't bother with trend lines, because there's no way to. Trend lines keep extending up or down. That's, you might as well just look at trend, and trend should be the item on your trade checklist, not the line itself. Like, is it breaking a major trend line? Maybe it'd be like a historical trend line for, a monthly or something like that might be significant, that you can put in a checklist, like, yes it is or no it isn't, but how does that fit into your trading plan, right? Yes, you'd like to learn about swing fail patterns. Okay, I will tell you that above here on the 10-second chart, 29,100, this will likely become a swing fail to the downside at the lower second. But it is just about it's where do lows and highs get put in across the different time frames. But I will go over that in detail in a dedicated stream. Then we'll just kind of keep it focused on that. And it didn't close above there, so there is no swing fail. Now, if it does not pass this wick low and then eventually regains the open at 29,110, then this would become a swing fail, by the way, as I just look over and start talking about it anyway right now. All right, for you guys on the other side here that are not in YouTube chat, you were looking for traditional markets, just to check on them. I do think they've got a little bit more to go here. Let's get off the 10-second chart and actually take a look here. Yeah, Dow definitely looks like it's grinding up towards that overhead resistance at 35,515 to 35,630 or so. I do think even if we see some down candles, the way that the Bollinger Bands are expanding, it's likely that area gets tagged at minimum, and then we come back to it later, right? So it's not, definitely not out of the question that area gets tested. From the momentum perspective, it's still got upside momentum above 35,316 for today. It's likely going to be right on top of the momentum pivot. But Dow likes to hang out, on its highs and lows for momentum. I could even see momentum coming down and just bullishly resetting on the daily based on lower term time frames. But right now it is looking pretty exhausted, but in terms of momentum oscillators. But this is not giving me anything. It's more about volatility metrics for Dow right now, and it's 70 over 50. This is likely going to creep up into 75, 80. That's probably the moving average, probably going to start increasing to the 60 range or something. I'm just ballparking, which would still give it the opportunity from the volatility side of things for it to keep heading up and testing that overhead resistance. NASDAQ on the daily is in its pullback. Nice little reversal off the upper second and third. I'm not seeing anything too crazy. It's still above its basis band. I would venture to, yeah. So, it's been hanging out in the strong half of a momentum oscillator like Stoke. I would venture to say that it's likely that something like the 4-hour is going to give you a pretty good indication of when this is going to bounce. And this still can come all the way back here, and it's basically like a gap fill all the way down to the lower first, and not much is interesting outside of the potential for a bounce. Where things get interesting is if it moves down to the lower second for the next gap fill area and then begins to test this last low. And the lower second's around 15,100 for NASDAQ. I would say that you probably don't want to see it back down there. But 15,300 is the area to watch to the downside, and then watch the basis at around 15,530 to 15,550 is what I'd be watching on the 4-hour closes for NASDAQ. Yeah, you might be able to get your edge on the overnight session for futures. SPY hanging out on the highs, still in that same zone. It did try to bounce off the 452 area. Below there, watch 450. 450 has dropped the highs in. It's likely to come down to 440 to 444 around the basis. I would venture to say that it's in fact, it's likely if it were to head down there. 442. 440 would be in and around this low, but what I would be expecting is the lower first standard deviation. It's going to move up, so it's probably going to be around the 440 to 442 area, maybe even 445. So no, 444 is way up here, so this is going to be around 440. Yeah, so I would just keep an eye on where the lower first comes in, and it's probably going to update to around 440. Keep an eye on where the basis moves up to. It's probably going to be around 446 to 448 with the way that the 20 simple is rising, or the basis is rising. So, and then holding on to this 452 support area. It's really not until it loses 450 or the wick low you could take, which is coming in at, yeah, let's just call it 450. It starts to lose that area on our close, especially the daily. Then we're looking at that at this headed down to test the basis and lower first area. Lower second is starting to come into this support zone that I've got here at 430 to 454, 453. And that's where I would just keep an eye on it. You want to see it, consolidate in this area if it comes back in, and then try higher later. Right now it is pretty darn extended. It is flopped over on the daily, but it's been kind of bullish or resetting on this move up. There is multiple drives of bearish divergence. It is in a pretty critical area for the bull zone, but it's in the bullish control zone, so can't argue with it until it starts to fall out of that area. Same for the 12-hour. What's the 4-hour looking like? Yeah. I mean, the bearish control zone is 440, so on the daily, that's the lower first standard deviation area. And I would expect, for that area also, likely that would be lower second area. If this thing starts breaching the lower second, it's probably going to test down significantly further to the lows. 440 would be the area, and then under there around 430. So just be aware of that on any kind of downside moves. I do think that it's probably ready for a decent pullback from here. We've seen NAS already initiate that pullback, but I don't have strong opinions in either direction for the more macro time frames, if that's what you are asking. Dixie. Dixie is, it did bounce back into range, so this is a deviation. It is still a downtrend. So the area that I would watch or areas that I would watch are this low side structure here at around 102 to the last highs. And I would take the wick highs because that's what needs to be closed above. And there is a low over there that it rejected from. So, and that's coming in at 103.57. Still a bearish. The bearish zone is going to be the upper first, the basis to upper first, which is coming in at 101.69. Nice. To 103 at the upper first. Can I use the arrow? Sorry. Wasn't using the arrow. So the basis to upper first is 101.69. Nice. And then the upper first here at 103. Got to get your meme numbers in, right? Somehow. Yeah, we got a minute to go. And we'll take a look at some of the updated closes here. How you guys doing over there in the YouTube chats? Any questions for me? Before we jump back in and take a look at what the 4-hour is doing and the 2-hour as well. So we'll do 4, 2, 1. I should do the 6-hour. Is there anything interesting on the 6-hour? We can go look at the 6-hour too. I'll just look at it all again. How you guys doing over there in YouTube land? We'll get to some alts for. Yeah, I'm getting more questions in this chat over here. YouTube's kind of quiet right now. I can look at a few alts, yeah. But realistically, most are going to be subject to whatever direction Bitcoin chooses. So just keep that in mind. We got our close here. We've got 4 hours left in the daily here. There is no public Discord. It's just me and a couple friends in there. There will be a public Discord spin. I have not made one yet. It will be free and open to anyone who would like to join. I do have it on the to-do list, so. I will let you know on Twitter, and I'll probably announce it here on YouTube as well. When it is available, I will let you guys know for sure. Okay, so as I suspected, the 4-hour lower second price is right on it here at around that 29,100. And the lower first is coming right in line with that 29,400 area, slightly above it. So typically, when you have a trending move that's going to get rolling, for instance, like this was technically a higher high to a lower low, what you're looking for is the lower first to the basis band to act as resistance, put in that another lower high, and then complete the trend with a lower low. So we've got the higher high to lower low. You want a lower high to lower low. In terms of the 4-hour trend in this case, and it's all bracketed at this overhead resistance, which is the consolidation range breakdown, and likely above it would still be a bearish retest all the way to the upper first, which is still hanging out at $30,060, so slightly above $30,000. And you do want to see closures above that area if you are bullish. And then even then, as it tries to, if it did get above there, it would try to come down and hold this area as well. In most cases, unless it just rips through to the upside, which is not my first take on the way things are going right now for Bitcoin. But it would have to come back down and reverse that trend with a higher low and then try out further. So in this case, from its current position, bears want to see this overhead resistance between the wick low of the range at 29.4 to the closing low of the range at 29.8 hold as resistance on any kind of a move up. Above there, it is danger, eyes on, for around that $30,000 area to be retested. And I would venture to say that bears would not want to see a $30,000 retest, but doesn't mean that the bulls that it wouldn't be a given that the bulls could push through either way. But it would give the bulls room to maneuver and position. So be aware of that. Let's go look at the 2 hour. 2 hour lower first standard deviation is at 29.3. And what is this song? Just random Streamlabs music songs playing now. All right, so 29.100 would turn the 2 hour back to the upside here. So that has remained fairly consistent with price going sideways here. Test to the lower first would be around 29.3. If we do see the 2 hour trading above there, 29.4 to the basis here at around 29.650 is going to be in the cards. So from the 2 hour perspective as it relates to the 1 hour, when you see the 1 hour and 2 hour turning up in tandem, drop to the lower term time frames to kind of gauge how much time is left for the room to the upside and then possible rejections on those lower term time frames, like the 15-minute, for instance, which is getting up into the oversold or overbought area. Not quite there yet on a consolidation. So you would need to see this bullishly resetting, holding the lows. If it passes the lows, it's likely going to continue down to some of the support areas we talked about. So needs to maintain at least the lower first from its current position, which is 29K. And it's got to get expansion above that 29,151 for it to actually do anything worthwhile to the upside, in my opinion here. When looking at volume, here's another tip for you. When looking at volume, closes below this wick low here. This high volume wick low is what is defining this consolidation here below support. And this is going to be what you want to pay attention to. So that's your 28,973. Pay attention to closes here. Now you can give yourself a zone to the downside as well for the lower term time frames at around 28,850. But we can see which candle is has created this consolidation, right? So I'm not digging this dance groove going on in my headphones here. Hold on. I guess it's not that bad. All right, so yeah, 29.1. What's the 5 minute looking like? Coming down for a reset. So when evaluating the 4 hour and under, 4 hours heavy pressure down below 29.3. If we do start seeing lower term time frames start to turn, 29.2 for the 3 hour. We've got 29.1 for the 2 hour. So it's really going to just go in an order here, 29K for the hourly. So we've got our stack. Start regaining these things in order on the way back up, and we should see some interesting retests of the breakdown. Until then, I'm not completely convinced of the bull's ability to push things back into this area just yet. But we will see how things kind of progress here in the last 4 hour candle. Be aware of 29.5 closures and above on the daily though. You could even take 29.4 and above. Doesn't mean that they can't avoid the inevitable, that being the bulls avoid the inevitable of the bears pushing things down further, but just be aware that it would likely mean that things test a little bit higher to the areas that I just spoke about. Yes, sir. Okay. Well, let's go ahead and look here. Who all do we have in YouTube chat over here? We'll take a look at some altcoins, and then I'm gonna jump out of here. Let's see. Well, not much discussion going on in YouTube chat today. I do see that there's it's about 10 people for the concurrent viewers right now. And then I see people hopping in and out. Yeah, you guys are getting a separate stream on for this chat over here. Okay, so USDT Coinbase spot. Sure, we could take a look at that. USDT Coinbase. Coinbase, huh? I'm just missing it here. I'm seeing Mexi, Gate.io, KuCoin, Femex, Binance. Still catching up. No worries, buddy. I see KuCoin. Oh, there's Coinbase staring at me. The Coinbase chart is dirty, man. It's a dirty, nasty chart. Might want to just look at the Binance chart. It's a lot more liquidity. Let's take a look here, though. Let's look at the Binance chart because it's not complete and utter garbage on the lower term timeframes because they seem to have liquidity. I will tell you from its overall structure, this is not a bad look structurally on the daily. So just looking at it from the log view, this is not bad at all. From the daily perspective, important areas to regain have been tested, which is the low side of this consolidation. Right, so you're at $1.55, almost $1.56 on the daily to this, wick high, which is coming in at the lows overhead here. So you can just take that low at around $1.88. So that's the upside. Anything below it is right now probably got to hold. Yeah, so we've got this high here corresponds with this low. Yeah, and this is the consolidation over here. Where'd that wick go? Right back to this low. I'd argue that you don't want to see a daily below this wick low at $1.10. That would be bad in terms of its current structure. Let's see how this lines up with a fib actually on its way up here. That should give us a good indication of some areas of interest and where they line up. So $1.28 to $1.37 is the preferred zone for this to hold. And that's your 50% to your 618. And I suspect, yeah, the 1.191 is coming in right at this high here at $1.80. So on any kind of a move up above $1.65, the wick high, that is where I'd be looking to around that overhead resistance at 188 to 190. And that would be your daily outlook. It is still pointed up on any closes above $1.55, but that is currently trading under it, so this is likely to turn Stoke down. And that's where, you know, $1.37 to $1.40, you want to see that hold at the 618 here. That's also this consolidation low from the way down. Otherwise, it's probably going to run back to about $1.20 if it gets below that $1.30 area. I'm not seeing much interest in there outside of this wick low. A few order block candles, but realistically, it's going to be $1.20 at the last low here to the spike low at about $1.09. That would be dangerous for this. If it did break that area, then it's likely gonna leg down to like 70 cents to around 65 to 70 cents. That's what I would say. But for now, I would say above $1.30, it looks fine. When looking at the weekly, let's take it. Yeah, the weekly's okay. It's a little. There's not much here in terms of history, so I would say, you know, above the areas that I just talked about, looks good on the weekly. The daily might get a little dicey here. Bitcoin continues down though, so just watch that. Well, you know, follow your plan. Not financial advice, of course, right? But yeah, there's op for you, Bobby. Litecoin, I can take a look at Litecoin. I got Litecoin not from YouTube, but from my chat over here. You know, Litecoin looks like it from just the RSI perspective. Bearish control zones around 84.57. And that's the 702. I mean, this thing can come back to the 618. It's fine on the daily. It's about 77, 78 bucks. From the band perspective, from the Bollinger Band's perspective, it's, you know, it's in a reversal continuation area. I would argue that this could even get expansion down to this last low, but you don't want to see it taken out. And the last low is there at 81.80. And if you're going to take the close, it's 83. So just be aware of that. Let's get rid of some of the stuff on the screen here. Get rid of volume. Oh, the fib is just a weekly move up. That's what that fib is from the last time that we looked at this. From the weekly perspective, speaking of the weekly, 82 to 83 is the lower first, and that is the last spike low in the daily. So what you want to see if you're looking for upside, you want to see a lower second standard deviation reversal that pops back up above this lower first and regains this little range that it built. Although, you know, it's just lower low, lower high. You want to see it pop back up, and I would say take out this wick high at 96 bucks. That's the big area from here. Below there, I think that it is going to go test around that $80 to $80, even to 83 bucks at this low. If it loses that area, it's right back into the upper 70s to mid 70s. I would just eyes on if you see expansion down, because, well, it's not looking very healthy right now. It's looking like a downtrend, but it is in an area where, you know, we see potential reversals coming into play. There is an order block here on the daily, so the most recent order block from the way down, you can mark this out if you'd like. It did spike into that today at the lower second standard deviation, and, you know, there is precedent for this area being a bit of a support resistance zone. So I would keep an eye on that, and that's coming in at an open of, and this is what I would mark on your charts there. Open at 87.20, close was at 88.09 for the spot charts. Yeah. Doge, doggy coin. I've got a doggy coin. All right, so let's take a look at Doge. Binance says spike the upper third and second. It looks pretty strong. I suspect this is because Elon changed the name of Twitter to X and he put the Doge symbol in his profile again. You know, probably, you know, trolling or an indication that he's going to use Doge in some manner for the platform, and I imagine he will. Look, you can already tip people in Bitcoin, Ethereum, and other coins, you know, by putting your wallet on Twitter or X Twitter. And, you know, you could do this for a while. So, like, you can tip people from there. You can go to their profile and tip them in many cases if they have it enabled. And all they do is they just put in a wallet, and, like, it just allows Twitter to act as a vector for you to send things directly to their wallet. But I'm sure that there's some kind of payments platform and some kind of something that he's got going on the back end that's going to be announced. And it's probably going to have Doge integrated, so I wouldn't be surprised if this thing, you know, pumps hard. I do suspect that, yeah, between yesterday, Sunday, and today's move up on Doge is driven by that. But, you know, I mean, momentum's looking good above 7.1 cents. It's trading at 7.46 right now. If it closes above there, it's going to get expansion to the upside, so it can keep testing, but back below 7.1, it's headed down. That's the upper first here. Back below the upper first at 7.1 cents, then it's probably going to head to the basis around 6.8 to test even further down to 6.7. As long as it stays above this last spike low of the move up at 6.664, or no, 6.64, sorry, or 6.57. As long as it's above that as long as it is above that area and that 6.64, 6.57 to 6.64, which is the lower first to that wick low, it's probably going to hang out and try higher. I can't imagine that it's going to be too bad closing above the basis here. I mean, the basis on the weekly, if it can get there, a move above it and a rejection would not be good this week. And then again, you're looking at the lower first on the weekly at around 6.64. So it's the same here as the daily. That is kind of the line in the sand. Otherwise, this thing's running back to, you know, mid 5 cent region, to maybe even 5 cents at the lows here, down here. Yeah, 6 cents on the lower second. You know, maybe that would be a support area as well. Yeah, because it is coming in. That would be above the 5.75 support zone. So I would really say 6.64 is what you want to watch. You do want to see it close the week above 7.33 cents, and that would likely see things headed up towards the 8 cent region again. Weekly momentum, you know, it's turned up above 6 cents basically. So yeah, this looks pretty decent for another move up. Again, nothing super interesting until it starts breaking above the close at minimum of this lower high in the weekly, which is coming in at that close is coming in around 9 cents. Otherwise, it's not that interesting just yet. And even when it puts in a higher high, you need to see that weekly higher low structure, or you need to see just a straight up breakout, which it has not. I would say even then you gotta be careful. But the intraday stuff you could probably trade up within the range here. It's a pretty big range between low side down around 5 cents and high side at the give or take 12-cent region to 14 to 15-cent region if you want to take the consolidation before the breakdown to the actual lows. But yeah, so that's at Doge. We got up, Litecoin, Doge. Any others that you guys are interested in? I'm sure everybody wants me to look at ETH, right? We can look at ETH. ETH is on the weekly. Let's go to the daily first. Let's check out the daily. See what's going on here. So it is approaching the areas that I had mentioned that it prior at around that 1830. I imagine this is probably going to reach for 1830. It kind of already got there. It's a few bucks away, 1832, but I would expect at this point, being below the lower first, I would expect the lower second to get ran, and that's actually underneath 1830 at 1820. Any closures below there, there is decent low side support here at around 1800. So that's what I would be watching for, is this kind of low side support. If it does start closing below the lower second and breaching 1830, which is it's this last low here. We can redraw this a little bit more high time frame though on the weekly, which is to say that above 1718 it's fine. And from the way up here, there's not too much that I'm seeing that I really see that's worth caring about outside of that 1800. So realistically, you've got 1800 on the close of this low to lower high structure that put in the lower low to the higher high break on a close of this last lower high. So there is a bit of a structural change, but this is just telling me consolidation is in play right now, and that's about it. Back above, I would say, yeah, you're gonna see resistance at 1909 if it heads up there. So there is like a zone on the closes here to the 1937 highs here. So I would actually eliminate this guy here and take the close of the actual higher high of this particular move. So the lower low to the higher high close. And I'd watch this support area around 1800 if 1830 is dropped. So 1860 is the basis on the weekly. Keep an eye on that. The lower first is just below this weekly close open. It's right around the wick low of this doji, and that's coming in at 1776. So the 1776 number would be the area on a weekly. If you did see it on the daily get down there, you want to see it bounce and then reclaim that 1800. So if it does continue down from here, that is the destination that I'd be looking for. Back above 1860, just keep an eye on that upper first area around 1940. It's not looking like it's going to head that way on the daily. It is looking like it does want to test down to that area around the lower second, around 1830, 1820 to 30. So just be aware of that lower second. If it can regain the lower first at around 1860, then you know, it would be interesting to look back to just under 1900 here at around the 1890 region at the daily basis band. Still bearish, Still bearish below the upper first and that weekly upper first. So it's the daily upper first right now, kind of giving us a zone between the daily and weekly, and the support and resistance areas at around 1930 to 1940. So still not out of the woods yet for ETH, even if it gets a nice strong bounce from here. My current perspective is that it's much more likely, should it break down below 1845 again, this daily low. We can mark the dailies with a horizontal ray here, and we'll do that in teal for the moment. So that, yeah, that's 1845. If we see another drive below here, look for the lower second to get tagged around 1820 to around 1800, which you could take the next daily low area at, you know, that's your 1827, but that would be below this zone on the daily. Is where I would be looking. So, and there's a few areas of interest in between, but I'd be looking at the closes here. Mark this up real quick. So three main areas of interest. You got your 1845. It does start trading below there, and then you've got a zone down to 1827 to 1816, kind of bracketing the lower second standard deviation, which is the wick low of this low over here from the 28th of June. And then anywhere below there, and I would be looking at 1800, which is a weekly. Yeah, oh yeah. Back above back above the basis, which is around 1890 to 1893. I'd look for the wick high. You just got to be aware of, 1905 area, which is these two spike highs around 1905. And then above there, I'd be looking to the upper first, which is coming in line with this wick high around 1930. So it's still got to get above there to go test around 1940, which is still overhead resistance. And it's got to regain that area, then come back down and find support, preferably above like 1900 or the upper half of, the 1800s here, which it is currently trading, mid 1800s, 1850. So. I have a question here in a DM that says, watching your stream, do you think that we will make lower lows before a macro bull run? I'm assuming you're talking about Bitcoin. So look, I'm not seeing, from where Bitcoin is now, people who are calling for lower lows or a retest of the lows. I mean, is that a possibility? Of course, yeah. But people that are talking about it as if it is a sure thing, I think that's being foolish. I mean, we're still above the basis band here on the monthly for Bitcoin. And I'm just not seeing, anything interesting in terms of lower lows, as long as Bitcoin is above the monthly lower first standard deviation. That's coming in at 19,500. It's this wick low from March of 2023. So, and quite honestly, below there, then yes. The low is in danger at around, on a close open basis at around 16,500 for the monthly. Of course, the wick low is at around 15,500. But as long as it's above the lower first on the monthly, I'm not looking for this to run those lows. Now, could price head towards the lower first? Yeah, wherever it ends up, either whether it's at 19.5, as long as it doesn't pass that area, it's probably going to bounce. And that would then start to, especially if you put in a low on the monthly, that would then confirm this major low structure as a macro low if it did put in another low, which would be a higher low. Now, the argument would be made that, you still need to, even if it did come back down to the lower first area, or let's say mid $20,000 area to low $20,000 area, if it did a 3 candle, put in a 3 candle structure, then it needs to just come up and take out the most recent monthly wick high to get its trend rolling. You're going to hear a lot of people say, well, that $48,000 area, yeah, it's going to be resistance, but what you'd almost want to see that actually is for Bitcoin to put in a high on the monthly, come down, put in a higher low, and then take out its most recent in trend high. That's what you would actually want to see. This is, historical resistances overhead, sure, but a nice higher low and then breach this area as a higher high, then you're digging into those areas anyway in many cases. And then that also gives the bands time to keep compressing in, and then Bitcoin doesn't have to run as far from the basis to upper first to try and move up. And then same goes for the downside though. Below the lower first, it's likely going to run the lows and maybe lower. Above the upper first, right from where price is currently, that's at 37,500. That's this breakdown candle here on the monthly. So, and then just above it at 38.5, you've got the low, but it's still got to get through $35,000, and it's still got to regain this breakdown candle open here from June of 2022, which is, at 31.8. So that's really, that 31.8 is a huge level, and it's a level that I talked about for a very long time on the way up for Bitcoin. And you can go back through the videos and take a look if you're newer, but I've talked about it for a lot. We got it tagged, and now it's, run the other side and go hit some of these downside supports, right? Test those areas, see what holds up. But no, my opinion is that I'm not looking that far out. There's no reason to be looking that far out. I mean, if you are just buying spot, you DCA during these times anyway, so just have different levels marked on your chart of where you would like to buy. Okay, so I will hang out for another minute here. We'll ask the YouTube guys if you have any questions before I go. Anything, it can be coin related, technical analysis related, whatever you'd like. Go ahead and let me know if you have any questions. And then for you guys in the other chat over here, I'm gonna call over there anyway. I've got to talk to someone. Gotta talk to your manager. I need to see the manager. Yes, so some of these guys over here are doing series 24 and 57 training. That's FINRA. Those are FINRA exams for it's basically market making. Yes, the evil market makers. Although the market maker boogeyman is just one guy pulling all the strings, trying to take your liquidity. No, that's not how it works. Hey, hello, Mr. JR. How are you doing? No questions there? Okay. I'm getting questions in a different area here. Bobby, did you message me? Why is this showing that this isn't, these are old messages? I got a notification that said that Bobby messaged me. What's up? Okay, so yeah, this is going to be, this is an interesting question. You know, if traditional markets fall from here, Bitcoin is already in a downtrend. Do you think that it's, you know, that because traditional markets could reverse off the areas that they're in? Mm-hmm. And if they do, you know, what does that mean for Bitcoin? I mean, in general, you know, I'm not going to take it tick for tick, but in general, if markets are coming down, I would expect Bitcoin to head down as well. Let's go ahead and take a look at how much juice Dixie's got here. You know, there's a bit of a meme trend line. Let's go over here to this set of charts. And again, this is not, I'm not taking this tick for tick. This is a more macro downtrend right now on Dixie. But it's got some room to run from the momentum perspective, from the Bollinger Band perspective as well. We've got a little bit of a trend line regression we can get in there. But again, like I said, above, you know, it's headed back to the basis band from the underside of the bands. This is, you know, your classic bearish retest zone just above it at around 102. And that's your 101.69 to 102. Above there, even to the upper first standard deviation on the Bollinger Bands from the daily perspective, that's 103 area. That, you know, basis to the, you know, the deep 101 area to the upper first at 103. That's going to be your main bearish retest zone. So Dixie has, it's got the ability to move up there. The weekly, you know, could get a nice little turn. There's a trend line regression here as well on the weekly. So 101.99, so 102 on the weekly would turn it. Keep that in mind. There's a little bit of a weekly trend line regression for the downside. And you can even get a little bit of a triangle structure on the momentum for the weekly. Whichever way it breaks is which way, you know, things are probably going to head for the longer term. Could this become a deviation on the weekly? You know, deviate support and then come back in. I mean, the weekly did back test it a little bit. Last week it was regained. It's the lower second to lower third reversal area. But again, I mean, this is not interesting below 102.30, for instance. That's the open of the breakdown candle. And that's coming in just underneath the basis at 102.42. It's pushing that lower first at 101.35 right now. It might close above it on the weekly. If it did, you know, or on the daily rather, if it did, you know, I'd look for further intra-week movements to the upside to test around that area at 102 to 103. It's just, can it hold that area? And from the weekly perspective, you know, I'm not interested in any kind of sustainable upside moves below 104.69. Nice. Just not. From the monthly perspective, I'm still watching that lower first standard deviation area at around 98.90, so just below $90. $99 rather, to 98.69. Nice. It really likes its meme numbers, huh? You know, could it dip a little bit lower, hit some of the the monthlies over here and the lower $98 region, sure. But that's kind of where I'm at on this. And the monthly is still headed down. Get rid of the meme trend lines here. 106.64. That will update in about 7 days. We've got the quarterly, which is flopping over. And that's 110.82. So I just really, it's longer term time frame pressure down. I'm not looking for this thing to set a macro low just yet. If it's going to, we might see the etchings of it over the course of the next, throughout this quarter into next, but just not seeing it just yet. And I do suspect that there's going to be other things happening in the economy that are going to dictate, maybe a little bit further drawdown from the looks of things over the longer term chart, which is a quarterly, which takes a long time to play out. This is going to be interesting to see, Fed funds rate, where we've got CPI coming in, or inflation at 3, but US core CPI coming in, it's below the lower second on its last read at 355. So core is not the same as your Bureau of Labor Statistics inflation rate, which is at a reading of 3% right now. Fed funds rate is not your United States Federal Reserve interest rate. It's your core funds rate at 5.08 to 5.25. So the Fed funds rate is different. But 5.25, are they going to go sideways? Are they going to go up? That's really where we're at, right? And that's going to be Wednesday. So I think that you're going to see a lot of things decided the latter half of this week. So after Wednesday into Friday, possibly bleed over into the week after. And then we'll see what the longer term charts start looking like at the monthly close open, and then go from there. And look, you guys, for those of you that I know very well that have directional bias right now, when you see opportunity, you need to take it regardless of your directional bias. Okay? Lest you get washed out before the real moves get rolling. Not financial advice, charting advice. All right, and then the last call for questions. That was a good question. I appreciate that. Yeah, I mean, you guys know what you're looking for, right? You guys have a bias over there too, I know. You guys also have NDA'd information, so yeah, you can't trade it. I know. It bars you from trading it. Well, when you're a processor for that stuff, that's what happens, dude. Somebody who's studying to be FINRA certified asks, if I'm working somewhere and I have information, can I trade person? No. Congress can do it, you cannot. Spin says, I've been calling a fake out by the Fed and then they turn on the money printer. Well, I don't really know what you mean by fake out, but money printer's on. So yes, I agree with you on that part. I'm not really sure what you mean by fake out. Maybe like they indicate that they're not going to raise rates and they do, or they aren't going to drop rates and they do. I would assume that you mean like they're gonna unexpectedly drop interest rates and turn on the printer like full bore. I mean, they've been printing to save all these banks that they've been blowing up purposefully, and then we have liquidity moving over into the Fed Now system. So like I could see them wanting to keep interest rates higher for longer, because then it allows them to backstop the system as they begin funding the Fed Now system, which is a different system. So it has to be funded. So you have to get the liquidity from somewhere, and you also have to hedge. Banks have to be able to have an attractive enough rate to hold treasuries through that transition. So you need rates to stay high. I don't know when they're going to be finished with that. Crash is over now. It's time to stimulate. I mean, the real economy, yes, but I don't know. You got to think about they're in a transitionary period as well. So where does the stimulus go? Where does the money go? Right? So in my view, it makes sense for them to keep rates about where they are. Maybe they hike it another bit. I don't know. But about where they are, and or take it down as slow as possible to keep the core Fed funds rate and the core interest rate where it is, so that they and the treasury market where it is, because it allows them to backstop, because they banks have to have their, when you're taking out risk, in large part they're using treasuries to manage that risk. And in this case, when you're switching over from one system to another, you have to bring liquidity over, and it takes a little while for them to spin things up. So you have to move that money over, and as you de-risk one side, you increase risk on the other. So you have to be overloaded on one side versus the other, meaning you have to have enough. I know a big deal has been made about they don't need to have, assets on the books, and they don't need to cover their risks and this and that because of the 2020 crash. That's not true anymore. They do need to have risk mitigation strategies in place, meaning they do have to, if they take on more risk in terms of depositors, for instance, they do need to, in most cases, they're going to buy bonds. And then they'll swap that maturity rate for liquidity when they need it. Then they'll do the same for, funding into a new system as well. But you need to overload your risk mitigation on one side. So you need the balance sheet to balance. So I don't know. You might get a little bit more of a clue coming in, coming up this Wednesday. And I'll be streaming anyway. Rates will stay high for 10 years. I don't know about that. I don't know if rates are going to stay high for 10 years. In between this time period, in just a couple of years, we're going to have a new election here in the United States. And, there's guys who want to do they want to shake up the financial system on both sides. And the establishment that is in power right now in Washington, I don't think they're long for this world in terms of their power in Washington, one way or another. I do think that both sides of the aisle here in the United States are fed up and ready to, you can tell by who's polling and polling well right now what the barometer and appetite for change on both the Democrat and Republican side here in the United States is. So I don't think that that system's gonna, be able to support such high rates through another 4 to 6 year cycle. That's just personal opinion, but it's also kind of what I'm seeing in the social sphere. So yeah, yes. Okay, so yeah, how can you use ES1? So I'm reading over here, sorry, I was flipping through this. You can use futures to kind of gauge. I mean, the monthly is above the upper first, indicating that yes, if it closes here, for futures, then the next big area is going to be the upper second standard deviation, which is 47.44, which is right around the highs. That would be basically running the high area on SPY futures. So wouldn't take much to see it actually run the highs. If that would be a good indication above the upper first that it's going to go at least test the upper second, right? Even if it was to act as a reversal zone. So yes. You can use the futures chart if you like. It's not always going to be the best indicator, but it's trading far cleaner throughout the time periods because it does trade post-market and pre-market. So yeah. You can use it. I mean, and Q's the same way. I mean, it's already making its way to the upper second. So, hello, Leroy. Yeah. I'm actually going to be wrapping up here soon, but yeah, I mean, the upper second's on the table for NASDAQ futures as well. I mean, it's coming right in at the close open highs. So it was actually a little bit of a gap up on the open on the monthly, and that's at 15,575, 15,600 area on the close open. Yeah, and then the actual upper seconds above there at 16,316, 16,3 area. Just keep in mind that the actual wick highs on NASDAQ were around 16,800, just shy of 16,800. At 16,767. The same goes for Dow. Dow is looking at a potential close above the upper first standard deviation on the monthly, which, by the way, was its rejection area on the month prior. So the next big area is going to be the upper second, in this case at 36,696, so basically 36,700, which is very close to the 36,832 wick high of the all-time high. So, no one can predict what's going to happen. Bollinger Bands are flat on the monthly too, so these can act as reversal areas, but it's uncharted territory, especially if there is another rate pause and or they begin to QE. They bring rates down. They're already printing money, so it's likely that these markets would respond well to it. And we're talking about markets. We're not talking about the real economy. And there's a big dislocation there, and there's been a big dislocation. And that dislocation between real economy and markets actually happened in 2008. I mean, like, this is not anything crazy. Like here, this dislocation from 08 into 09, this was a dislocation in markets and the real economy as well. I mean, times were not easy all the way up in 2010 through 2012. I mean, it was not easy. Tons of jobs lost. Like the real economy, the regular person was experiencing a lot of pain during this entire time period. And this actually lasted all the way up through 2016. And that's where real economy started to move very well along with market economy. And that's where we saw real growth. And because of the real growth in the economic sector and the financial sector and market sectors as well with it, it made 2020 that much more painful because it all got wiped out. So there's your answer on that. I have a DM that says, what is your political position on the candidates? I'm not going to talk about that. Yeah, not talking about that. Hey guys, see Jedi, see Pro Beast. You can probably infer my position on the political landscape over time, but that's not what this channel is focused on, because it doesn't matter. We're trading markets, and we can predict what's going to happen based on our analysis criteria. So for those of you just entering, I am going to be wrapping things up here. I'll take like 1 or 2 questions before I go. But you can scrub back with the DVR function, and you can see what I was talking about earlier in the stream. And yeah, if you're in here, go ahead and like the video if you're hanging out with me. That always helps. And then if you you can either scrub back, or when I end the stream, it will also just start over. It might be delisted for a little bit, or it will be unlisted unless you have the link when the Bitcoin in 60 seconds video goes live, only because of the way that YouTube handles the algorithm pushing live stream content after it's after the live stream is over, I should say. Appreciate it, buddy. But yeah, any questions before I go? Otherwise, I'm going to wrap things up here. So Wednesday, I will obviously have a live stream, and we'll take a look at what's going on with price and that kind of stuff. But I will actually focus on what's been requested pretty highly here lately, and that's swing fail patterns and how do I look for SFPs, what's the criteria. So I'll be doing that, and then we'll do a wrap-up stream on Friday. So it's probably going to be around this time that I started today, which is roughly 12 p.m. Pacific Standard Time, and that's most likely the time frame that it's going to be on Wednesday, and yeah, and we'll do one on Friday. So we'll do Monday, Wednesday, Friday. Join late, but are you long or short on BTC? Right now, I'm only in a short position, but that's a swing short position. No problem, Spin. Yeah, it's a swing short from above 30, 31. So I've been hanging on to this short for a while. I did not bother taking a breakdown short because I took a short at the spike of the weekly overhead resistance at 30,300. I took and filled a scalp. I've took profit at the support side structure, and the rest is just to let it ride to see how far it'll go. So I took profit at 29.5 and then $29,000 on that particular position that was filled on the spike high to the weekly. This was 2 days ago now. And you know, the rest is just stops flat, and I'm letting it ride down to the next support, see what happens, and or I will consider filling that short more if price does rise and get rejected. At the zone marked here from earlier, you'll see me mark up a zone between 29.4 to 29.8. So if Bitcoin does trade back up there and get rejected, then I'll consider filling that scalp back up. Otherwise, it's the last take profit is just let it ride to the next support areas and then evaluate from there. When am I going to go long? Well, I mean, that's dynamic. We got to see reversal structures. We got to see support, either resistance regained as support again, or it's got to get to some of the support areas that I'm interested in, which right now, unless Bitcoin regains the range lows, especially the range low close at $29,800 to $30,000 in and around there, then I'd consider looking for a long position. Otherwise, it's, I'm not even taking bounce scalps right now. There's no reason to. There's no setup for it yet. I want to see how it reacts if it heads up and retests the 29.4 to 6 area, or 29.4 to 29.8 area. That's what's interesting to me right now. So, oh yeah, there was this too for the hourly. So there is a nice little move down to the 2618 from a trend fib perspective. So a wick below it, almost down to the 3-spot extension here. And, where do things get interesting here? Be right back above around 29.3 to 29.4, the 1618. Other than that, it's not too interesting. But yeah, that was just for when I was trading from the highs of this particular move up to move down. But yeah, the big area is going to be this here. It's overhead resistance. So when looking at this from here, I mean, the only way that I'm going long is if things work their way back into the zone above and hold it as support on any kind of a retest, then I'll go low. Maybe. And that's even then it's a maybe. I'm just not longing a lot of this right now. Just not seeing what I want to see. And as I mentioned in the video, beware of 29 to 29.2 bounces that regain the range low. That's what this is. This is what I'm looking for. If that's to happen, then I'm interested again. But there's still a higher likelihood of rejection further up. Yes, you can DMX me on the new old platform formerly known as Twitter. You can send me a DMX on X. DM on X. Thoughts on Doge and Twitter? I mean, Elon put it in his profile. Don't really care. It's not interesting till it's above like 9 cents, 8 cents, 9 cents. Then I'd be looking for it to run like 10, 11 cents, as I had mentioned earlier. I actually went over Doge and took a look at it. So, but like for narrative purposes, I don't care about narratives. I care about the charts. So you're always gonna see me deflect away from any kind of narrative. The chart is interesting. It does present the possible setup for further upside, but yeah. So that's going to do it for me today, guys. I appreciate you hanging out. Of course, as always, there's going to be a Bitcoin in 60 seconds later. And if you guys do think that, this stuff is helpful and you think that others might find it helpful as well, whether that be the Bitcoin in 50 Bitcoin in 60 seconds even, although they have been around 50 seconds lately because it's just, there's not much more for me to explain about the different areas that I'm looking at for price movement, but share it with others that you think might find it useful. So if you do have a circle of friends that are trading and they have not seen some of this content yet, get them in here. Let's all get this thing rolling. I will have a Discord soon. It's going to be a little bit, but there will be a public Discord. It will be free, not paid. It's just setting all of the different stuff up has not been the highest of priorities right now, which is, getting a bot in there to help moderate and check that people are real and that kind of stuff. So, but that will be on its way soon. And then we'll kind of go from there. But we're growing at a good clip here in the community. I'm growing across YouTube. Twitter is getting there. It's slow, or x.com, I should say, is slow. But as they make changes and I move content over, we'll we'll hopefully start seeing an uptick there. TikTok, for whatever reason, has just went from like nothing to actually being relevant enough to get my attention. So we'll see if I can pull some of those people over as well. And then we'll go from there. But I appreciate you guys. Thanks for hanging out. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. That's the most important thing. And turn the damn leverage down. You don't need to have such high leverage. You can make lots of money on lower leverage too, even with small amounts. All right, take care of yourselves. I will talk to you later in the Bitcoin in 60 seconds videos. With all of that being said, Landy out.